This is Mark Avallone, financial expert, joining us on Good Day with some of the impacts it could have on our wallets. And we were just talking in the break here leading up to this. Is there anything in particular you're keeping an eye on right now? There's a lot going on, but is there anything that you're maybe a little more focused on than something else?
I'm looking at what the retaliatory tariffs could be from overseas, and that's really the biggest risk, that this becomes an escalation. The president has thrown down. He has publicly negotiated with countries that are very proud and very formidable and have major economic power of their own. I don't think they're going to be in a mood to just say, we give up and you win, we lose. That's not the way this is going to go, especially with proud nations like China. So I think the public negotiation and the attempt to almost embarrass them to agreeing to his terms, I'm not sure that's going to work. And if that doesn't work and then we get into an escalation, that concerns me.
So what do you tell a consumer? What do you tell an investor these days?
Well, we tell a consumer that if you're going to buy a big ticket item that's on that list, then maybe accelerating your purchase by a few days or a few weeks could help you. I also would tell them to save some money, as usual, for a rainy day, because the economy is slowing just a bit. I don't like the numbers that are coming out. GDP forecasts are pulling back a little bit. The tariff talk and the other policy uncertainty and the government cutbacks, lowering GDP estimates. So when there's uncertainty out of Washington, long-term investment decisions aren't made, and that slows the economy, and you could almost policy yourself into a mini recession or worse. So that's the concern.
I was talking to an investment advisor, and they said one of the hardest things to do is to tell people not to panic when it's a situation like this, where you really just feel like you want to panic. You're right. I mean, nobody wants to see their balance sheet drop and drop and drop and drop. So, as we wrap things up, Mark, is there anything that you can say to people right now?
As an advisor, I am not against people trimming or adding depending on where the market cycle is. What I am against is an all or nothing. I'm going to go well over my risk tolerance and buy all stock when you're a balanced investor. And I'm also against people who may be a balanced investor going to all cash. But if people want to tweak on the margins and lower stock allocations so they sleep better at night, lower their risk allocations, look at what's under the hood, maybe even stay within the same range, but get rid of some higher risk stock versus maybe a more domestic-oriented dividend player. So little adjustments are fine. I would avoid an all-out emotional response to these headlines.
Now, as difficult as that might be, it might be the best advice. I'm sure the phone's ringing right now. Please check with your advisor before you make any rash decisions, for sure. Mark, thank you very much. Come back and see us again. I'm sure we'll have much more to talk about in the near future.
Good to be here.